Most investors I meet are exhausted not by losses but by choices. Should you invest in Nifty 50 or that Midcap fund or that Flexicap fund or that star fund that somebody mentioned yesterday? It seems like a never ending buffet of choices where you don't know what is safe to eat. So you keep piling up the plate until nothing tastes right. Now imagine this instead. You stop choosing. With just one fund, you quietly own 1,000 companies, mega cap, large cap, mid cap, small cap, and even micro caps. One click and your portfolio looks like the India Inc. itself. Every sector, every industry, every opportunity. And here's the idea. This is a fund you could actually hold for life without the stress of constant checking or switching. It sounds too good. Let me show you why this idea may be the ultimate no drama investing strategy. Here is the truth. The mutual fund industry doesn't make it easy for us. There are more than 30-40 AMCs, hundreds of funds, each claiming to be the best performer. And what do we do now? We open YouTube, watch 5 videos, each recommending different funds every time, and we are back to square one. I once met an investor who proudly showed me he had a portfolio of 17 different mutual funds. 17. And yet he was not sure if he was doing the right thing. This is what I call decision fatigue. You are so busy making choices, you forget the whole point was to make your money grow, not to keep adding trophies into your cupboard like mutual funds. Let me share something shocking with you. This is real data and not theory. Most of us at some point, we have added new funds to our portfolio because it looked great on paper. Strong returns, star rating, top of the chart. It feels very logical. You chase the winner. Now imagine this. You spot a Flexicap fund that was ranked amongst the top quartile performer. Out of 31 Flexicap funds in the market, 8 will be the top, that is 25%. You pick one of those 8, and here's what actually happened. After a year, only 2 of those 8 stayed at the top quartile. One more year later, not a single one remained. The fund you thought was a champion slipped quietly into mediocrity. So it is not just Flexicap. Look at small cap funds. At the start of this observation period, there were 23 small cap funds. 6 were in the top quartile. If you had invested in any one of those 6, after 1 year, only 1 survived in the top quartile. Another 1 year later, 0. The winners vanished. New funds took their place, and this cycle began to repeat. Midcaps tell the same story. Out of 26, 7 were top quartile. After a year, only 2 remained. Another year later, just 1 fund survived at the top. So do you see this pattern? The chances of picking tomorrow's best performer based on yesterday's returns are very close to 0. The chances are 0. And here is the catch. If you keep chasing these new winners, future winners, you will eventually end up with 15 to 20 funds in your portfolio. And guess what? All that chasing only makes you look like an index fund, something we call index hugging or closetting. You have just recreated the index, but with more confusion, more cost, and less clarity. So here is the message. Most of us are index creators without even knowing it, simply because our behavior, it pushes us to keep adding in search of higher returns. The tragedy is that this reality is invisible when you're in the middle of it and you think you're being smart, but data quietly tells us another story here. So if you're one of those investors who believe in adding new funds every time a chart looks attractive, here is a very simple option. Instead of building your own accidental index with 15 or 20 funds that overlap and confuse, why not just buy one real index itself? And that's BSE 1000 index fund that we are discussing today. One single fund that covers the entire breadth of India's stock market. Think about it like this. You are not owning just top 50 companies. You are owning 1,000 companies, mega, large, mid, small, and even microcap. You are not stuck in only 15 sectors like Nifty 50, but you get 22 sectors and 159 industries. Everything from your bank to your biscuit manufacturers there in it. And instead of 57% of your money being locked in just top 10 names like in Nifty 50, here only 32% freeing up space for more. That means no single stock or sector can dominate the future. In other words, instead of playing the endless game of fund hopping, you can own the entire India Inc. with just one click. And here is the thing, this isn't just about convenience. Historically, the BSE 1000 has actually outperformed Nifty 50 in 10 of the last 17 years, delivering 3.47% higher returns every year for 5 years. Now keep in mind, this is historical index data, not live fund performance, because the fund itself is new. But the principle is clear. Owning 1,000 stocks, you spread your bets wider, reduce concentration risk, and you give yourself a shot at riding more of India's microcap growth story, which I will come back in a minute. Now, because investing isn't only about numbers and charts, it's also about behavior. And behavior is where most investors lose the game. Think about the last market crash. Everyone knew they should stay invested for the long term, but when your portfolio falls 20%, 30%, it hurts. Our brains are wired to avoid pain more than chase gain. This is called loss aversion. And this is exactly why so many investors quit too early or they keep switching the funds. They can't handle the roller coaster. But here's the beauty of holding 1,000 companies in one fund. When one sector falls, another is rising. When small caps struggle, the large caps step in. When banks take a hit, FMCG or pharma might cushion the fall. So your portfolio is never just one story, it's the whole novel with different characters stepping up at different times. That means fewer sleepless nights and less temptation to jump the ship at the worst possible time. Let me give you a simpler picture. Think of investing like eating a thali. If one dish is too spicy, there's always curd or dal to balance it. The thali doesn't collapse just because one item is not perfect. The BSE 1000 works the same way. It balances out extremes so you can actually stay invested and let compounding do its job. And here is another difference no one talks about. When you buy Nifty 50, you're basically buying India's giants. The household names everyone already knows. But BSE 1000 goes further. It doesn't just stop at the large caps or mid caps. It even includes microcaps, those tiny small companies that could be tomorrow's rising stars. But microcaps are very risky if you bet on them individually. Most investors would never dare to do that, but when they are just 3 to 4% of your 1,000 stock universe, they become like spices in the thali, a small pinch that adds flavor without overpowering the meal. That's how this fund quietly captures India's future growth stories while keeping you safe with the stability of the big players. Now, before you consider this fund, do a thorough research. This fund obviously has a deeper drawdowns than Nifty 50. It is more volatile. To get a detailed report, please do reach out on this email ID. You can use this as a starting point of your research. The purpose of this video is purely educational. It is not a recommendation. So you have to do it based on your risk assessment and goal setting before investing and take professional help. Over the past 5 years of this study, microcap has seen 2x growth in their percentage market cap share from 3% to 6.6%, faster growth than any other segment. The average market cap growth of microcaps has been 6x in 5 years, but in investing in them directly, it is fraught with risk. So this gives a balanced participation. The bigger lesson is this: sometimes the smartest investing decision is not to chase complexity, but to embrace simplicity. 1,000 stocks, one fund, lifelong exposure to India's growth. If you found this video useful, please consider liking it. Please share it with somebody who's confused about fund picking, and subscribe for more no drama investing ideas. And tell me in the comments, do you think one fund for life is realistic, or would you chase multiple funds? I would love to hear your views.